stuck with RVNL for 3 years, you'd have done nothing with that money. So it's suddenly just...
Yeah, no, absolutely. Combination of a couple of things coming together. But yeah, 35 points lower, 17,415 is where we are at this point in time. Andrew Holland is joining us, CEO at Avendus Alternate Strategies. Andrew, great to have you with us here. Thanks very much for your time. So the US 10-year is now sort of hitting 4% levels, Andrew. Market expectations of how high rates will go have also moved up substantially. In this kind of an environment, what's the prognosis for the Indian market? We had a very interesting chart which someone put up for us. Basically, the correlation between the US 10-year and the MSCI Emerging Market Index, absolutely perfectly inversely correlated. Go on, Andrew. Morning.
Morning. So you're right, Prashant. The difference over a month in terms of expectations has changed completely, hasn't it? From maybe the Fed going on hold or maybe 25 basis points in March to now possibly 50 and more after. So the data is not supporting the market's optimism that the Fed will go on hold soon. So that kind of, with what you're saying about the 10-year bond yield at 4%, it kind of puts us in that no man's land a little bit, right? In terms of our market's still optimistic, will the Fed go on hold? But growth is still, quite resilient, both in Europe and the US. And obviously with China reopening, that brings a bit more optimism. So that kind of stagflation theme, our narrative, might come at some point. And I don't think the market's kind of expecting this. So it's still working on the optimistic side of the equation with the Fed. But if that's not to be the case, then obviously, earnings forecasts, as always, will have to be brought down if the Fed remains as hawkish as it is. What does that mean for India? It means that probably the RBI in April, might go, higher and stay there for longer, which is not great for our growth and probably would mean again earnings revisions, for at least for the first half of the year. And therefore, there's no real catalyst for our market because globally nothing's happening, and locally there's nothing really to kind of get excited about. I know that obviously the budget was good, and we'll see the benefits of that in the second half. But it's going to be that kind of tricky first half. Is probably not going to be great for our markets. At best, we can maybe tread water around these levels a bit lower. And then the second half, I think, will start to get better as growth starts to pick up and earnings forecasts get revised a little higher from where we are today.
Okay, we can only sigh at that, right? The first half is not going to do anything for investors. I mean, I take your point on board. It has been a struggle, actually, to get to any kind of alpha, to generate alpha in this market has been hard over the last 1 year. But Andrew, what about some spaces that are seeing a recovery? Within consumption as well, domestic two-wheelers are coming back, although not at the same pace as what they were, in, say, 2018, 2019. But nevertheless, double-digit growth is coming back over there. Any of these sectors that you like in consumption?
No, we do. We like we like FMCG, we like domestic consumption, we like banks. So I think, because of what I've just said and what we've been seeing in the first kind of couple of months of this year is just being very rotational in terms of where you're going to make your money in the short term. So, for example, if the Fed is going to go for 50 basis points and continue to be very hawkish, maybe tech stocks in the US take a leg down from here, which should have an impact on obviously our IT sector here. So I think those are things which are going to play out in the first half. So it's going to be, whilst the index might not do anything, might kind of see a fall from here, the rotation is going to be a little bit killing for investors because you're going to think you're in the two-wheeler space and you do well, but then another sector comes along and money moves out. So it's going to be a tricky, rotational, difficult few months ahead, I think.
All right, Andrew, what about a couple of these spaces like the railways as well as the defense space? There's likely to be a big push from the government out there. Any themes you like from this space?
So Nigel, I don't think the themes that we talked about have gone away, and that's where we're really kind of concentrating our kind of bets in that defence, renewables. We know that's going to be a global investment cycle, and that's going to continue in India. So we're not moving away from that. We're not moving away from the fact that there'll be in terms of infrastructure spending more on kind of factories and smart offices where India can provide some of the security kind of problems that we've seen in terms of supply outside of China. And those are the things which I don't think are going to go away from us, as well as the whole domestic consumption theme in terms of travel, hotels. It's things we've talked about before, and I just can't go and move away from them to try and find anything more exciting at the moment. So that's where we are, and I don't think we should just kind of follow this rotational kind of market around in the next few months, and just stick to where the long-term and short to medium-term themes are going to play out over the next few years. So that's where we're concentrating our minds and bets, because that's the best place to be. Otherwise, you're really kind of following what the next data point is going to come from the US. Will that affect interest rates? If it doesn't, if it's positive, then your whole sector thinking changes. So stick to the themes that will play out despite interest rates going up or down, will play out over the next few years.
Okay, by the way, the market is under pressure now. The Nifty is giving up on its gains of yesterday. It's down almost 50 odd points. The Sensex is also moving lower, 170 points. I think the drag is coming from the Bank Nifty, which is down about 100 points. Actually, it's not just banks, it's IT as well. So these two leaders, Infosys, TCS, Axis Bank, are all under pressure now. Even consumption. So a bit of that froth, a bit of that steam that we saw yesterday is coming off. Andrew, before we wrap up, I mean, Nigel and me are very interested to know who you're betting on this time. Both of us are Arsenal fans, and the trajectory has been really good so far. You think Arsenal's taking the cup this time?
Andrew, we have had a tough last few years. So Sonia and me are, grinning. What's your take? Are we going to go home?
Yeah, well, I mean, we haven't won something for a long time, so it's good to see that Arsenal are doing well after a very long time. I did watch that program, last year. Last year it was, when Arteta took over and the difficulties he had. So I think his long-term plan is paying off. Obviously, being a Manchester United supporter, I would hope you'll slip up at some point and we can overtake you. But so far, doing all the right things, eking out those results. So good luck.
So, Arsenal reminds me of the RVNL stock. I mean, did nothing for years, but now it's just sort of zooming. It's what we just spoke about, so it came to my mind.
All right, Andrew, great to speak with you. Thank you very much for your time. It's always a pleasure having you with us here on the program. Thanks indeed. Look at just two names I want to highlight. By the way, the Nifty is down 70 points, which means that we are at the low point of the day, which also means that we are around the 200-day moving average. I think we should be around there. So as of yesterday's close, the 200-day for the Nifty stood at 17,392. We're at 17,374. So whipsawing around the 200-day over the last two sessions. Today is the third day that we're doing that. Two names specifically. One is TCS. That one is actually selling off pretty hard, right? 1.33% lower. That's a $50 cut on TCS. So watch out for that name. The other one is ITC, and this is something we put out day before yesterday on Market Laser. Now, the thing is, ITC was one of the stocks which was providing support on down days to the market. It generally had momentum, and it's a large weighted name, but technically it is not poised very well. So that's kind of one important leg missing for the market.